Hi everyone, thanks for attending today's webinar. We'll be kicking off in around 2-3 minutes, just letting some final attendees to join. Before we go any further, can you please confirm if you can properly hear me and if you can see the presentation and only the presentation on your screen? Okay, thank you very much for confirming that. Okay, Khan is not seeing the presentation. One second, let me just pause it for a moment and share it again. I'm having confirmations that the presentation is showing, Khan, so you would need to check what's going on in your GoToWebinar module. Okay, so let's kick this off. Today's agenda I'll be briefly introducing myself. I'll be talking about 2 different market types you will encounter when you're trading. Then we'll go over the Fibonacci theory and what it's based on, and then how to use the Fibonacci retracement specifically to trade FX. And of course, we'll talk about how you can manage your trades, meaning your stop loss and take profit levels. And at the very end, as per standard, we'll have the Q&A time. So you can ask all your questions then. Please write them down during the webinar if any questions arise, and I'll do my best to answer them at the end. So while there are still people joining, I will go through the disclaimer quickly, so bear with me for a moment. Contents of this material are provided by third party, not hot Forex, and are for informational purposes only and do not constitute investment advice. Hot Forex and Blue Sky Binary assume no responsibility for any potential errors, inaccuracies, or omissions in this material. Nothing in this communication contains or should be considered as containing an investment advice or an investment recommendation or a solicitation for the purpose of purchase or sale of any financial instrument. Any views or opinions presented within this material are solely those of the author and do not necessarily represent those of Hot Forex, unless otherwise specifically stated. Currency trading may not be suitable for all investors as it carries a high degree of risk to your capital. Trading such products is risky and you may lose all of your investment. Past performance is not indicative of future results. Poor fill rates, expiry times, market volatility, and platform errors could result in losing trades. Before deciding to invest in currencies, you should carefully consider your investment objectives, level of experience, and risk appetite. You should be aware of all the risks associated with foreign exchange and currency trading and seek advice from an independent financial advisor if necessary. Okay, so with this out of the way, let me introduce myself. My name is Otto. I'm part of Blue Sky Forex team, which is a part of Blue Sky Binary. We are an education, research, and trading group, and we provide 24-hour trade support and analysis. And we do this to help the community and the traders to trade safer and make better trading decisions. Our team consists of nearly 10 senior traders already, and Blue Sky Forex is presenting this webinar on behalf of Hot Forex in order to educate you and help you to become highly profitable currency traders. So now the two market types that you will encounter during your trading activities is first price action, aka the trending market. Now this is more powerful as usually the large price movements, they are driven by significant news. And this event, when the price is moving a lot, perhaps like 100, 150 pips, then what you should do, you should check if this movement is driven by fundamental news, or if there is a technical aspect behind that movement. You have definitely heard the saying, "A trend is your friend," and in most cases it's true, because you can really catch these significant price movements and earn significant profits. Now, identifying a significantly trending market, it can be a bit more tricky because, as I said before, the trends need to be driven by significant news in order to be, so to say, most safest to trade. Okay. The other market type is mean reversion, aka ranging market. Now, this is definitely more common and a lot more easier to identify, and definitely can be profitable. You can use Fibonacci retracement patterns to trade on a ranging market as well. However, you will, in the examples that I will bring later on during the webinar, you will see that doing a trending market with those significant price movements, Fibonacci retracement patterns might seem to be more effective. Okay, so the Fibonacci theory, what is it? You see, the Fibonacci numbers and the Fibonacci sequence, so to say, they go in the order of 1, 1, 2, 3, 5, 8, and etc. It's actually, the principle behind it is really, really easy. The current number, let's take 2. The current number is the sum of the two previous numbers, so 1 plus 1 equals 2. 1 plus 2 equals 3. 2 plus 3 equals 5, and so on. This sequence was discovered by an Italian mathematician, Leonardo Fibonacci, on the 13th century. But the roots of this theory actually go back into Indian mathematics. So the origins of this theory and idea is already from a long time ago. What is really interesting, and you might see that relatively mysterious as well, if you're not a biologist, that this Fibonacci sequence and the Fibonacci numbers, they can be found all around nature, in flower patterns, bee procreation patterns, and so on. If you really start looking into it, you can find a lot of information about this on the web, by the way. If you start looking into this, then it's really interesting actually to read about. So that is the principle of the Fibonacci sequence and the Fibonacci numbers. Now, how to use Fibonacci in effects, and how does it relate? There are actually a lot of different Fibonacci, so to say, indicators in MetaTrader 4, in example, Fibonacci arcs, fans, time zones. Fibonacci retracement, of course, is the one that we will be focusing on, as this is the most common Fibonacci tool that is used in FX trading. Björn, yes, the webinar is recorded, definitely. You can find also the recordings on previous webinars on Hot Forex website when you're logged in. Okay, so The Fibonacci retracement tool itself, it allows you to identify after, in example, on a trending market, after a significant move, where the price might retrace. You will definitely have a more visual idea of it after I show you some examples a bit later on. The retracement levels drawn on the Fibonacci retracement tool is 23.6%, 38.2%, 50, 61.8, and a full retracement of 100%. These levels, these retracement levels, are a potential entry and exit levels of your trade, and I will show you this in a moment. This definitely can be used both on a trending and on the ranging market. So the key things to keep in mind when you are using this Fibonacci retracement tool in your MetaTrader 4 or any chart provider is on a trending market, it's highly recommended to wait for at least 100 pip move. Doesn't matter if it's upward or downwards, it works the same. And the move should be during the London session and overlapping the US session. So during the most busiest hours, you should be seeing or expecting a major price movement. The price movement can already start earlier during the Asian session. That's totally fine. But you should be keeping an eye out for exhaustion after the London market closes. So after 5 p.m. GMT. During the late US session, after you have identified some exhaustion in the price movements, you can draw the Fibonacci retracement onto your chart. I will show you how to do this shortly. And then you can keep an eye out on the percentage levels. 23.6 is the first level you will see, then 38.2 and so on. And the idea of your entries and exits, what you can do, you can, as the price will, with very high probability, retrace to the very first retracement level of 23.6% at least. So if the price is halfway there after the exhaustion, you can trade towards that level. It's of course better to see if I bring some examples, but right now we're just going over the theory behind the retracement levels. And the other method you can use to trade this Fibonacci retracement is after the price has reached the 23.6% retracement level, you can trade towards the trend as if the price was moved by significant news, then most likely the trend will continue after a certain correction. Okay, so here is the very first example how the Fibonacci retracement tool looks like. Now this is important to keep in mind, depending on your chart provider, you might need to either draw the Fibonacci retracement tool from top to bottom or from bottom to top. This is very important because on some chart providers, in order to get these levels like you see here, you need to draw the Fibonacci retracement tool from the end of the drop. And we're talking about a bearish drop right now, specifically. You need to draw the tool, you need to draw the Fibonacci line from the end of the drop to the very beginning of the drop. In MetaTrader 4, however, you will draw it from the start of the drop to the very end of the drop. Okay? So keep that in mind. If the lines don't align or don't really make sense, and then you might drawing it the wrong way or the other way around. Okay, anyways, let's take this example. You see a significant drop here in the price. You see exhaustion here, indecision in the price movements. So you see that the price is actually going up to the very first level of the retracement, 23.6%. On this occasion, on this example, what I would do after identifying a near doji here, and you see already some exhaustion here, but after this candle, I would be trading towards the very first level of retracement, and you can see you can actually reach relatively good profits here. And at the same time, after it reaches that level, you can go short and trade towards the trend. Regarding stop loss and take profit levels, I will explain a bit later on where you could potentially set them. But this is the principal idea how you would use the Fibonacci retracement tool to your benefit. So you can trade it towards the first level, or if it has reaches this side at this level, and you are confident that it will go further, you can trade until the next level. That's totally fine. Okay, what I personally like to do is I like to bring you some live examples from a real live price chart, and let me just bring it up right now. 1 second. Okay, so please write in the question section if you see my MetaTrader 4 right now. Okay, excellent. Thanks for the confirmation. Now, please note that I like to bring most examples on a Euro USD 1 hour chart. Euro USD, to my mind, is really fundamental currency pair, and it also follows most technical principles of indicators and any theories. So this is not a really long time ago, and this is the current hour. You see the price is moving. This is live chart. I just went back a bit just to bring you this example. I did this just before the webinar started. This price movement here is the 26th of October. Okay. So you have this significant price movement actually throughout 2 London sessions. This is really significant move, 200 pips and more. Please note, everybody, that I will answer all the questions at the very end of the webinar. So I'll attend to these soon. Okay, so this is the price movement. And what you would do here, first of all, let me show you where to find the Fibonacci retracement tool. I have it as, if you have this tab open here, 1 second. Okay, never mind. If you have this shortcut tool open here, then the Fibonacci retracement tool is here under the F. I'm not sure if you see it or not. If you can't, then at the very top you will have Insert. You can find all the indicators here, but there is a specific category for Fibonacci under this tab. Here you will see different Fibonacci tools. Time zones, you will have fans here. You have Fibonacci arcs. I don't personally use these. I use only the retracement as I find this most effective and useful. So we're going to add Fibonacci retracement. Now what you're going to do you're going to take this very high peak point here before the drop, and you'll draw the Fibonacci retracement to the very bottom of the drop. Okay. Now, after these levels are drawn on the chart, you can see that the very first level is this 23.6% retracement level, then 38.2, and so on. After drawing this Fibonacci retracement on the chart, you can clearly see how the very first level is serving as a significant support and resistance level for the price. On this occasion, as the price has dropped so much, that psychologically, it wouldn't go really any further. So the price started ranging after that for a significant amount of time. However, the first level still served as a great support and resistance level, especially on this part here. You can see how the price clearly bounces off here, and the same for the second level. The higher it goes, the stronger the level becomes, of course. Here you see a lot of indecision at the very first retracement level already for a significant amount of time. So on this example, how you can use this to your benefit, after identifying the exhaustion here, you see this extreme exhaustion candle or indecision candle here, followed by a doji. This is a clear sign of exhaustion of the price, and see how stably the price moved upwards to the very first level where it actually bounced off a bit. Okay, then of course went up again and so on. Now, at this point already, or even here somewhere, you would have been able to started your trade towards the very first level and then gained some significant profit. And on the contrary, as the price reached the very first retracement, you could have gone short and also made some decent pips. Now, what about the take profit and stop loss levels? I'm going to provide you with some examples using this scenario. Let's say you went long here. You saw that the exhaustion settled in. You can draw your Fibonacci retracement tool. You entered a long position here, or even here, it doesn't matter. Your stop loss can be just a little bit below your Fibonacci retracement, the very first zero level, the ground level, so to say. As if you are familiar with support and resistance levels and how to utilize them, then I'm quite sure that you realize that the support and resistance lines, including the Fibonacci retracement lines, the price can move just a bit past these levels before doing what you expect them to do. Okay? Very rarely they act like this price movement here, that they bounce directly off that level. It's really rare. Usually they move past a certain amount before actually doing what you expect. Okay, so setting your stop, as you're going long, setting your stop loss just below the ground Fibonacci level, that would be my stop loss level. Of course, depending on your trading style and your trading preferences, you can set it even further if you want to give the price more room, more headroom to play. And your take profit level can be the very first Fibonacci line. That's fine. If you're a scalper strictly and want to get or earn some smaller and quicker profits, then you can also set your take profit level just below the first Fibonacci retracement level. That's also fine. Now, if you're going short at the first Fibonacci retracement line, then it becomes a bit more tricky, because you have to properly and adequately analyze the price movement, the price drop. If it is too extensive, then it's higher probability that the price consolidates, starts ranging, and will not continue along with the trend, because the trend is completely exhausted. If you're dealing with a 100 pip move, then there's a higher probability that the price will continue towards the trend, towards the direction. So setting your take profit and stop loss levels should be dependent on that. If you're going short here, then setting your stop loss just right above the next Fibonacci retracement level is fine, or at the level. That's totally up to you, but I would set it just a bit above that. And your take profit level, it can be the ground level if you want, if your risk appetite is higher, but I would set it somewhere around the middle or halfway through towards the ground level. You can trade this either way, going long here or going short here. Okay, so this example is brought with the large drop. Now, what you can do, after you have identified that the price starts ranging, let's say we are only observing this ranging market here for several days, right? You would still, let me just bring up the retracement tool again, 1 second. Okay. So you still take this low point, and let's say at here you already identified that yes, the price starts ranging. Okay, drawing the Fibonacci line from the bottom to the top, you see how these Fibonacci retracement levels also serve as a really great support and resistance levels. Again, here you see how the price just bounces off. The very first level here, you see how that serves as a great support resistance level for the price. So, doing this, so to say, on paper, it looks really mystical, how this works, how these levels really work, and why does it show like that? Why does the price actually behave like that around those levels? Now, as the Fibonacci sequence you can find all around the nature, and we human beings, we are part of nature, and our trading decisions are emotional, and then this also and the Fibonacci sequence and the idea applies to our trading decisions as well. This is the reason it works. So let's see if we can. I didn't go further in the past into more price history. Let's see if we can find another example that I haven't checked out earlier. Okay, let's scroll a bit further past, just for some randomness. Okay, let's scroll more into the past. Let's see October, September. Okay, let's take this an example. Okay, let's draw the Fibonacci from the top down to this place here. Okay, make it a bit smaller. All right, so again, the very first level here, you can see how for the next several days the price fluctuates around it. You can see it repels the price very precisely on the 9th of August. The next level here, as soon as the price reaches, it bounces off again, right? So you can see how these levels have significant role in the future price movements. After you have identified that the price does not drop anymore, it started ranging here. You draw the Fibonacci line here, and you can see how these Fibonacci retracement lines serve as significant support resistance in the future price movements. This one here, this one here. So this is one of the examples. Let's see if we can find another one. Okay, we have the drop. Let's do an upwards movement now. Let's take the tool, bottom of the price to the top. Okay. Again, you see the first retracement level clearly bouncing off the price from here. Second level serving as a support for the downwards price movement right after the large drop after the peak. Again, here a lot of indecision here sets in straight away. It bounces between these levels here. This one serves as a resistance for the upwards movement of the price at this point, and so on. You can draw these Fibonacci lines on the chart the whole day long, and you can see how the Fibonacci retracement lines really serve as good support and resistance levels everywhere. To be really honest with you. So it takes a bit of practice to perhaps get used to identifying the tops and bottoms, where to draw the Fibonacci retracement lines. So yeah, I think it's time for any questions now. Let me just bring up the questions section, make it a bit larger so I can see what you've asked before. Okay. Okay, how to draw fib on how to set the entry and stop loss. This I already showed on the charts. Okay, the screen is so small it's difficult to see the values. Yeah, I understand. Sorry, my monitor is a bit with high resolution, so that's the reason why the numbers seem to be small on the chart. But it's all about the principle, and I think that was clearly presented. Okay, Mai is asking, there are different types of Fibonacci tools in MetaTrader 4. Can I advise how to use each and every one of them? Now, to be honest, I personally use only the Fibonacci retracement. I'm not really fond of the Fibonacci arc or fan. I mean, these are used as well, but the Fibonacci retracement tool itself is the most commonly used across the board. And this is what we focused on this webinar, and this is the most, to my mind at least, the most important variant of them. Okay. Vinutha is asking, what is the best chart time frame to draw Fibonacci? I personally use mainly 1 hour charts. I'm really fond of 1 hour charts. However, depending on what strategy you are using and what type of trader you are, you can always zoom out to 4 hour and daily charts to check the market conditions and in what market environment you're trading in. That's totally fine. I do that myself as well from time to time. Of course, depending on my mood and also the market conditions. It's really great to zoom out and see what is the price doing on a larger scale. And at the same time, it's totally fine to zoom into 30-minute and 15-minute charts to pinpoint your entries. Okay, so you see the smaller picture and the smaller price movements, and really use that to your benefit to make or achieve an accurate entry. Okay, a great question from Justin. How long do you keep the levels? Meaning how long I have the drawn Fibonacci retracement levels on the chart before I delete them. This can range from anywhere from 1 day up to a week. That already depends mainly on the market conditions. If you have a significant move or a very sharp move upwards or downwards past the ground Fibonacci retracement level, that is definitely the moment I delete the levels and see what the price does. So let me perhaps show you an example here as well. Let's take this example. From top to bottom, I draw the Fibonacci line. You see these levels, they hold. As soon as the price breaks out or goes further down, that would be a moment where I will start looking for other opportunities. Okay? Even though this first level still serves as resistance for the upwards price movement here, I most likely would have already deleted the levels from my chart. Okay, or if it goes really further away from the initial and the ending point of my drawn Fibonacci retracement tool. An example. Let's see how far this one is. Talking about 15th of July. Somewhere at this point already, 10 days after, I would have already deleted the retracement levels. Emeka is asking a great question as well. And this Fibonacci be used in higher time frames like daily and weekly charts? Definitely. These Fibonacci levels work essentially on any time frame, any chart period you use, but always keep in mind the lower time frame chart you use, the narrower picture you have of the overall market. Even if the Fibonacci retracement levels work, of course you can scalp this method on lower time frame charts, but it's not as accurate as on 1 hour plus chart time frames. Okay, Muhammad is asking, is the 61.8 level a golden number? Not exactly. Okay, let me bring up the Fibonacci retracement lines again. This is the ground level. This is the 23.6 level. 38.2 level, 50 and 61.8. Now, on this example, the higher you go, the stronger the retracement line becomes. Even if the first retracement level at 23.6%, if that works out for you in your trading opportunity or trading example, and the second one as well, it doesn't matter that the 50% level or 61% level is the golden level, so to say. Even though they become stronger, the more the price goes up, at least in the immediate vicinity of the ground level, at the point where you would have drawn the ground level, the closer the price is to that period, the higher significance the higher levels carry, if that made sense. The further you go away from the drawn point at the ground level, the less importance or less weight the retracement levels carry. Okay. Okay, Justin is also asking, do you use the pins only to create the retracement? Not at all. You have to take the very peaks of the price movements. Doesn't matter if it's a doji or if it's a shooting star or a hammer. The candlestick patterns don't matter. You just have to take the high points. Okay, Khan is asking why and when to use Fibonacci. Why should I? You don't have to. This is just one of the methods that will help you during your trading. Fibonacci retracement levels, along with other support resistance levels, I find these to be very effective in finding where the price might retrace. So of course it's up to you. You can use them not, but I personally find these very effective. Vinuthi is asking, when does Fibonacci become invalid after cutting through 61%? Okay, it's a good question. I wouldn't say that the levels become invalid at any point. I'm sorry, that was a wrong statement. Not any point. Of course, if you draw a Fibonacci line and check the price chart again after 1 year, then it would be ridiculous to consider those levels you drew on a 1 hour chart 1 year back, right? So that makes sense, that's logical, everybody understands that. I would rely on this principle that I brought here, that let's say after 10 days I simply delete the Fibonacci retracement tool from the chart and look for other opportunities. But this highly depends on the price movement that comes after you have drawn the Fibonacci retracement tool, because on this occasion, after the price breaks lower the ground level, I most likely would have already deleted the retracement levels from my chart and look for additional and other opportunities. And Ruthedo, I think my answer also answered your question. Okay, Emeka is saying, from your presentation, you alluded that Fibonacci is best during London and New York session. Can you show me on the platform how to fix these market times on both markets on my chart? I'm not completely understanding your question. First of all, how we trade or how we use the Fibonacci retracements here in BSB is in conjunction with one of our BSB core formations, which we name the Hummingbird formation. This is a significant rise during the New York-London session, and in the late US session we are looking for exhaustion, and of course in conjunction of the Hummingbird formation we go short and then see where the Fibonacci retrace, how the price can retrace. And of course the dead cat bounce is another formation where we use the Fibonacci retracement even more as the price significantly drops and then retraces and so forth. The BSB core strategies and formations, they are covered in a different webinar topic, so you can definitely look that up. We also have recordings of that on the Hot Forex website. But in terms of how to fix the market times, I believe and suspect you mean how to perhaps differentiate on the chart the trading days, perhaps. If this is what you are seeking, then you just right click on the chart, go to properties at the very bottom, you open the comment tab and tick the show period separators. Click OK, and then you will have the separators showing the different market and trading days. Okay, Justin is asking, can you confirm, can you use it in a bearish trend? Yes, you can use it on a bullish and a bearish trend. I think I brought examples on both of them on the live charts here. Noel Wendell is asking, what is dead cat bounce? This is one of our BSB core formations. We use the Bollinger Bands in most of our core formations. Dead cat bounce is essentially dependent on the significant price drop during the London and US overlap session. So you can trade the retracement to the first Fibonacci level. Again, these formations, they are a topic for a different webinar. Okay, do we have any other questions coming in? Okay, Emeka is saying that the separator lines drawn on the chart, like I did just previously, don't tell us what markets you're trading on. Okay, Emeka, what you can do is you can use the web to, one of the website is forexmarkethours.com, and on that website you will have a very great overview of the market open hours and the session hours for Tokyo session, Sydney session, London session, and the US session. So take that again. Okay, forexmarkethours.com. This is the website that I used in my early days to check what session is going on. There are definitely other websites as well that tell you what the session is at the moment ongoing and what is there to follow at what hours. So if you go on, if you trade a lot, you will basically remember these hours when certain market is open and when certain market is closing up. So it will become a common practice. Okay, last call for questions. If you have any other questions arising later on, then please do send them to webinars@hotforex.com. Okay, excellent. Seems that there are no questions coming in anymore. So everybody, thank you very much for attending this webinar today. It was a pleasure to present it, and I hope to see you next time. Have a great day. Take care.